Today we are uncovering Guy Spier's current US investments to reveal his portfolio structure, its fascinating evolution, his winning investment strategy, and specific stocks that this incredible investor is betting on right now. Guy Spier has been tremendously influential in my investment journey. His book, The Education of a Value Investor, fundamentally transformed my approach to the markets and also introduced me to William Green and his masterpiece, Richer, Wiser, Happier. Both Spier and Green continue to guide me through the world of investing, showing how to compound not just money, but also knowledge and how to expand my horizons. Though I'm probably not the best student they have. To analyze Guy Spier's portfolio, we'll be using our brand new tool currently called Smart Money Portfolios, though I'd love to hear your suggestions for a better name. So here we have Guy Spier's entire US stock portfolio. We see it is valued at $287 million, and that last quarter he received $440,000 as dividends. And did he make any changes? Well, no, he didn't. That is why he is called the master of doing nothing. But his portfolio value went up by $2 million, and we see that he has 14 investments. Now, this is the investment history, which is actually not that helpful if we are looking at the entire portfolio, because this is not the value of the portfolio, this is the number of shares that he has and the average price of those shares. It is going to be very useful when we are going to look at specific stocks. And then this is the dividend history. So these are all dividends he received over the years every quarter. We see that there was even a quarter in Q2 2024 when he received over $500,000 in dividends. So that is his portfolio and all the stocks in it. So let's start with his smallest position, and that is Arch Resources. And as you can see, it says Arch Old. And the reason for that is that Arch Resources merged with Consol Energy to create Core Natural Resources. Probably in 3 months' time, we will learn did he sell the stock or is he holding shares of Core Natural Resources. So this is the smallest position at 0.4% of the portfolio. It is worth just over $1.1 million. He received some small dividends, $2,000, and the stock went up slightly. So last quarter he gained $25,000. We can see that he bought his first shares of this stock in Q2 2024 for around $152. Right now the price is a bit down. It is around $140, but it is a new investment. We don't know what's going to happen, especially after the merger. We can see that the dividends went down in the last 2 quarters. Okay, next we have Alpha Metallurgical Resources. This position makes up 0.56% of his portfolio. It is valued at $1.6 million. There are no dividends, and he didn't make any changes to this position, but the value of this position went down by almost $300,000. Now we can see here that it is just as new position as Arch Resources, and those 2 stocks were probably bought because of the influence on Guy Spier made by Monish Pobrai, his close friend, who invests in both of those companies on a much bigger scale. So far, the price is really going down. He bought it for around $280. Right now, the stock is valued at $200. So it is going down all the time through those 3 quarters. Okay, next we have Seritage Growth Properties, 0.7% of the portfolio. It's valued at $2 million, no dividends, no changes to this position, and the value in the last quarter went down by $250,000. But this time we see it is an older investment for Guy Spier. He bought his first shares in Q1 2016, and we can see that the price was around $50. And he kept on buying. Then he sold a bit when the price was at $40. And then we see that probably when there was a dip in price to around 30, he started to buy even more shares. Around $40, he was adding to it, but then the price just fell all the way down to $9. And also what we can see that at the same time, Seritage Growth Properties stopped paying dividends. So they were paying quite a lot of dividends. In the first quarter of 2019, he got $75,000 for dividends, and then there are no dividends. The price goes down to around $10. And since that point, he is holding right now 500,000 shares. No changes since Q2 2020, but the price is, well, going down. It seems like this investment really didn't go the way Guy Spier intended to, but he's still holding it. Probably the fact that it is such a small position, there's no reason for him to sell and take the losses, because some changes to the business may occur. There were a lot of speculations about this company and its future, and changing CEOs and going private and all that. But nobody can predict the future, and I think that Guy Spier is just saying, well, maybe I lost, but there's no reason to try to salvage those $2 million if they have a potential of maybe going up at a certain moment. Okay, next up we have Alphabet. That is, of course, a parent company of Google. It makes up 1% of the portfolio, valued at $3 million. He received some small dividends, $3,000, and the value went up by $375,000. Of course, no changes to this position. And we see that he bought those shares in Q2 2020. The price was around $70, and right now the price is closer to $190. But what we see here is that he just bought those 16,000 shares around 5 years ago, and he is just keeping them. There is no movement. He made this bet when the price was at around $70, and he just owns this company. No movement whatsoever. Right now we can see that for the last 3 quarters, they started to pay dividends. So this is this long-term mindset of just buying a piece of a great company and not messing with this investment at all through the years. Next, we have Alibaba Group, and it makes 1.4% of his portfolio, valued at $4 million. No dividends received last quarter, and the value of the stock went down by $1 million. And we can see it is a very similar story to Alphabet. He bought it in Q2 2021, and he is just holding this position without any changes. The difference is the price, because he paid something close to $225 for this stock, and right now it is around $85. So it's another stock that, well, didn't go his way. We all know the story and the hype about Alibaba. Also, William Green, the author of Richer, Wiser, Happier, on his podcast, he mentions a number of times that he bought this stock and that he feels so bad that he lost so much money, but he never sold. So he didn't actually lose. And I think this is the same mindset from Guy Spier. As long as he is not selling the stock, he didn't lose that money. He lost the opportunity to invest it in other things. And that is, of course, meaningful. But he can just hold this business and see what happens in the future. We see also that Alibaba paid two dividends in Q4 2023 and in Q2 2024, and we can see it is going up. So he may get some money back through dividends over time. Then we get to the daily journal. Now, this position is 2.2% of the portfolio. It is valued at $6.5 million. No dividends, and this stock went up by almost $900,000 last quarter. And we can see the same approach to investing, buying the stock and just forgetting about it. So he bought this stock in Q2 2021, no changes to the number of shares till today, and he bought it for around $338, and right now the stock is at $568. So this is a really good investment, even though it is not a huge position, and over time there were no dividends. Okay, and then we get to Moody's Corporation. That is 4.4% of the portfolio, valued at $12.7 million, and he received some dividends, around $23,000, and the stock went down, but very, very slightly, $33,000. And we can see here, it's a similar story. We know he owned this stock since Q1 2016, but then he added to this position in Q2 2020. And we can see this small dip in price. This is probably the reason he bought more shares, because the price went down, and at the end of the next quarter, when he actually owned those shares, it was up to $270, and he probably bought it closer to $211. So he was holding the shares when the price seemed really interesting for him. He added to the position, no change here, but we can see that the price is going up all the time, but in the long term. That is important. If we look at the short term, for example, from Q4 2021 till Q3 2022, we can see that the stock was going down the entire year. Really, really meaningful change. 240, and a year earlier it was almost 400. So if we want to be long-term investors, we just cannot react to short-term fluctuations. If we believe that the business fundamentals are still the same and it is a great business, it's just going through a rough time, then it shouldn't scare us, because thanks to that, he is up a lot, because the price is closer to $500 right now. Also, all the time he was getting great dividends, every quarter. Last quarter, we know that is about $23,000 through dividends. Before we move on, I just wanted to let you know that if you like this new Smart Money Portfolios tool that I'm using, you can get access to it by becoming a Patreon. And I will be adding new investors to it over time. It will keep on growing. And you will get all the data, calculations, and graphs way before I will post a video about it. Also, the idea is to keep the data up to date all the time. So now, if you are a Patreon on a medium or high tier, you not only get access to Stock Ranking Pro, but also to Smart Money Portfolios. I hope you will like it. Okay, let's get back to Guy Spier. Okay, and then we have Micron Technology. That is 5.8% of his portfolio, and it is valued at $16.8 million. He received $23,000 as dividends, and last quarter the stock went down substantially. It lost $3.9 million for Guy Spier. And we see that he bought his first shares in Q3 2019. It's Micron Technology, so I don't remember exactly when Monish and Lilu bought their shares of this company, but I guess this buy was influenced by those two investors, those two friends of Guy Spier as well. And then when the price basically stayed the same, because he bought it for around $42, when the price was $46, he bought even more shares, altogether 200,000 shares. And since then, the price goes up and down, nothing really significant. Right now, it is at $84. He bought his first shares at $42. So he is up definitely on this investment. But what is interesting, Monish Pobrai and Lilu, that they probably influenced Guy Spier to actually buy this stock. They sold it when it was down. They didn't believe in this company so much. They didn't have such a long-term mindset. And that is something I really love about Guy Spier. He seems not to be worried about short-term fluctuations. And by short term, I mean like 2 years. He just keeps the stock and see what happens. He knows that the fundamentals are basically similar to when he was buying the stock, that the story is the same. And also here, he gets dividends every quarter. Okay, next up, we have Berkshire Hathaway. And it makes up 7.1% of his portfolio, valued at around $20.5 million. Of course, no dividends from Berkshire. And in last quarter, this stock went down, so the value of his investment lost around $300,000. And the same story we know from most of his other investments. We know that he owned them. We don't actually know when he bought them, but we know that he owned those shares in Q4 2014 when the price was around $226,000, because that's Berkshire Hathaway Class A shares. And he owned 30 of them, and he still owns 30 shares of Berkshire Class A, but right now the share price is close to $680,000 or $81,000. So he more than doubled his money, almost tripled his money over that time, over those 10 years. And he just kept those shares. He didn't make any changes even when the price went slightly down or when it was up in Q1 2022. No changes here. Okay, And then next stock is Ferrari. Now, we see that he owns those shares since Q1 2016. And as far as I remember, the story is that he bought shares of Stellantis together with Monish Pobrai, and then Stellantis spun off Ferrari, and Monish, as far as I remember, sold those shares. I mean, he definitely sold those shares because he doesn't own Ferrari right now, and Guy Spier hold them. But he did trim this position, so we can see that when the price was around $150, he sold a lot of shares. He had 200,000 and he cut it down to 80,000 shares. The price kept on going up, and when it was around 330 or maybe even 430, he sold another 20,000 shares. So right now he owns 60,000 shares of Ferrari. And I think this is the first stock we saw so far that he actually trimmed down when the price went up. And this was a great investment for him. Okay, and yes, no dividends from Ferrari. Okay, next we have Bank of America. That is his fourth biggest investment. It makes up 11.7% of his portfolio, and this investment is valued at $33.7 million. And he received some impressive dividends last quarter, almost $200,000 through dividends. And also the stock price went up, so the value of this position in the last quarter went up by $3.2 million. And here we see that he owned those shares since Q4 2014. And then when the price, and the price back then was around $17, $18. Then when the price was closer to $24, he added some shares. He had 590,000. He added to over 767,000 shares. And since that time, he is holding the shares, even though we can see a lot of fluctuation in the price of the stock. But again, in the long term, it is going up, and he is making a lot of money thanks to it, especially that he's getting great dividends. We can see like every quarter he gets, in those last 2 quarters, he got $200,000. A year earlier, 185. A year earlier, 168, and so on. We can see so much money coming back to him for this $33.7 investment. Of course, that's the current value. We know that he paid way less for those shares, so that is a great investment for Guy Spier. Next up, we have the third biggest position, MasterCard, and it makes up 12% of his portfolio. It is valued at $34.6 million. He received nice dividends of around $43,000, and the stock went up, so the value of this investment went up by $2.1 million. And again, the story we all know. He bought those shares, or he owned those shares, because I don't think we actually know when he bought those shares for the first time, in Q4 2014, and the price back then was around $86. Right now, the price is closer to $526. So it's an incredible investment, and as we can see, there are no changes. He just buys the stock when he thinks that the price is right, and that's it. He just holds it, the price goes up because it is a great business, and at the same time, we see those great rising dividends. really, really nice. Okay, and his second biggest position is American Express, 21.6% of the portfolio, valued at $62.3 million. He received another great dividend, $147,000, and the price went up really significantly, $5.3 million for Guy Spier. Now, I just want to emphasize one thing: the amount of dividends he is getting. Like I said at the beginning, there are hundreds and hundreds of thousands of dollars going to Guy Spier every quarter, and it is not a huge portfolio. So not only the value difference of the stock is making those investments a success, but also the dividends. And right here, we see that it is another stock that he actually trimmed. So he bought, or he owned, American Express in Q4 2014. The price was around $93, and then he sold it when the price was roughly the same, 98. He trimmed this position a bit. He trimmed it again when the price was around 125, so it was up a bit. And since Q1 2020, he holds 210,000 shares. No change to this position till today. But the price, well, we can see that in the last 1.5 years, the price went up to almost $300. So he trimmed it when he was slightly ahead. He probably decided to invest in other opportunities better in his mind. But lately, it seems that it's really, really working for Guy Spier. And he also is receiving really nice dividends. We can see they are not always going up. In Q3 2018, we see that went down. Also here in Q1 2020, and it didn't change for a long time. So it's not that stable growth as we get from dividend kings or dividend aristocrats, but it is growing, and the last 3 years it is growing really, really nicely. So that is American Express. And finally, we get to his biggest position, Berkshire Hathaway Class B shares. So if we add together Class A and Class B, then Berkshire is definitely a really, really important part of this portfolio. Class B shares make up 22.1% of the portfolio, valued at $63.7 million. Last quarter, the stock went down. The value of this investment went down by almost $1 million. And as with most of his investments, we know that he owned shares of Berkshire in Q4 2014. Back then, the price was around $150. Right now, the price is closer to $450, and he still owns the same amount of shares. And of course, there are no dividends. Okay, so that is the portfolio of Guy Spier. If I were to name some key takeaways from this analysis, I would say that even though he is called a master of doing nothing, it may not be the whole truth. When he was asked about this nickname, he replied that he does not have to disclose his international investments in the 13F filings, so he may be doing more than we know of. Secondly, I really admire the quality of companies he invests in. Maybe not all of them are great, but all the meaningful positions are just wonderful businesses. That really shows that he concentrates on thinking like an owner. He's not buying shares to sell them at a profit, but buys them because he wants to own a part of a wonderful business. And lastly, he is a really concentrated investor. His top 3 positions make up over 55% of the portfolio. When he sees a great opportunity, he knows how to bet big and take advantage of it. I really like his portfolio. It is a true representation of value investing principles and the teachings of Warren Buffett and Charlie Munger. Thank you for watching and see you in the next one.